following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that Gold Report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. It is better to believe than disbelieve. In doing so, you bring everything into the realm of possibility. Albert Einstein. Market-wise, let's take a look at it out here. We have the Dow Industrials down 148, NASDAQ off 28, S&P's down 20, gold contract down $11.40, trading at 10.52. Silver down 9 cents at $13.98 an ounce. Platinum down $8 at $8.31 an ounce. Copper down 2.5 pennies at $2.04 a pound. Light sweet crude down $1.84, trading out at $40. Bottom line, folks, oil broke a B point, ABC structure on the way down. $35 coming at us at oil. Pretty amazing. Bonds, 10-year down 9 ticks, 126.21. 30 up 4 ticks, 155.31. Both the 10 and the 30, one higher price, lower yield. King dollar, check it out. King dollar, folks, got to a higher high today, gave it up. We're up $1.75, 175 ticks. You're at 100.01. I suspect King dollar looks like that's it. When I say that's it, it's going to get really intriguing here. Why? The way the market's acting right now, we're going to go through it, but the way that the market is acting and reacting, you had Janet Yellen come out here today. She gave her speech. Inside that speech, there's no surprises. What I got out of that speech more than anything, though, was this, is that she was talking about the aspect of every 3 months, the Fed publishes on their website exactly how each and every Fed governor that votes feels. And inside that context, where the question came up was, okay, this wasn't a part of the question. This was a part of what she was actually saying. They were asking about rates and the amount of increases that may come after the first rate. And what ended up happening was this. And, bottom line, I haven't heard this out here in the financial world yet, but this is what I got out of it. What she said is this. She said that if the economy was moving forward as expected, well, guess what? Rates would continue to go up. It's like, whoa, man, I was in my car listening to this. And even after the fact, the conversation wasn't about that. Go over that speech. And it's interesting. I think the market is reacting to that in a large way because bottom line, that was the number. And everything, and what she specifically said after that was she's saying, no, we don't have a mechanical way of going up on a continual basis. But if you go over that speech, you're going to see inside of that speech what was actually said. So market-wise out here, what we've done is this. We got to a higher high today. That higher high is going to have lighter volume. Bottom line, it's a failure on price, failure on volume. What's really intriguing is that when the Dow was running big time yesterday, the Dow only did 867 million shares yesterday. It's like, you got to be kidding me. Bottom line, they got it going. Guess what? Today, we probably are only going to do about the same amount. Dow got to a higher high, giving it up on price, giving it up on volume, giving it up all across the board. The SPY The benchmark and the SPY, guess what? We're underneath it. Your November 9th benchmark, 209.49. We got to 211, couldn't handle it coming off that. Bottom line, also going to have lighter volume. So you got to a higher high. You failed on price. You failed on volume. Downtown, here we come. The Qs. What do you have with the Qs? Same setup in the Qs. The benchmark and the Qs, we're right at it. It's 114.51. We're at 114.55 right now. Qs also are going to come in with lighter volume. We got to a higher high. Bottom line, that whole baby is set up. Once again, take them south. Gold contract. Now, this is where this gets really GCG6. Okay. So, gold out here today goes south big time. 113,000 contracts. Now, that is fast price destruction without volume. The low that was established out here 2 days ago is 1051. We've hit 1049, and you know what? They might be able to spike it lower. That being said, is it going to make a difference on the equities? Well, guess what? I don't think so. You know, we take a look at the equities. If we look at Rango Resources, Rango was up 250 yesterday. You had volume out here of 1 million shares. You're backing down 87 cents today with 593,000 shares. If you look at an Eagle, yesterday you go top side. We get up to a price point of 27.48. You do 1.8 million. This has a little bit more volume. We're at 1.4 right now. XAU, HUI, bottom line, they went topside with volume. They're pulling back with lighter volume. Bonds. We go over to the bond market. Bonds continue to say they want higher price, lower yield. Bonds look to me like they're going to set up another ABC up, folks. It's pretty amazing. Bottom line is that the 10-year right now is at 126.20 and the highs 129.18. The U.S., the 30-year is right next to its highs. Okay, this is just amazing in this context of where we are right now. So the 30-year is trading at 155.29, and the spike high is 158.28. You know, we traded at 158.03 for, 2 days. Bottom line, you're up here, and you are up here with huge volume. The move yesterday was pretty extraordinary inside that bond market. Now, let's go over to King Dollar. We take a look at King Dollar. What did King Dollar do out here today? What King Dollar's done is this. Gets over the highs, gets over them nice, too. 100.54. You're under them now. We have done good volume, 36,000 contracts. That's a big number. The real key is going to be how does the King Dollar go into 99.47? So 99.47, no doubt, is down another half a penny. We'll see whether they get follow through going down into that level. Tomorrow we do have, and this is with, oil. Oh, man, this is a trip. So oil, folks, oil broke a B point, broke it with volume. It's convincing. It's all of the above. Oil has hit 39.84 out here. Thus far, we've done 503,000 contracts, just basically taking this baby out and taking it out with spades. It's 516,000. A to B equals C to Z, $35, man. And the oil equities, of course, taking it on the chin. That's what's bringing the S&P down. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And folks, this is, it's always pretty bad. Well, it's getting worse out here, it seems. I'd like everyone to send a lot of good white light, a lot of prayers out to San Bernardino, California. So there's not a lot of news on this yet, but bottom line is that there's another shooting. It looks like there's 2 people that were active shooters, and there's 20 people that are at least wounded. When I pulled up it looks like it's some kind of a public center. Bottom line, bad scene, So please send some good white light out there. This is bizarre, one day after the other, no doubt about that. Market-wise out here, so if we pull this baby up and look at some of the, let's go the oil contract first. So the oil contract, this is what you have with the oil contract. We've hit a low out here of 39.84 thus far. The A on this is $49.18. That was established on November 4th. Your B is 41.21. So you're talking approximately $8. Your C is out there at 43.46. That gives you approximately $35. The inside of that context, that of course has taken the oil stocks down with it. You get Exxon down 220. Now, what's going to be really cool here with the Exxons and the Chevrons of the world, they had a huge expansion on the way up. Exxon on the 24th of August was at 66. It goes from 66 up to 87. Now you're getting that retracement, and the retracement is coming with some juice, So I suspect this little baby can get all the way down somewhere into 73. And just be patient, because the way that oil equities like to trade, they trade in big consolidations, and that's what you have here. So it's just going to take more patience, because what's intriguing is that even oil at 35, 32, whatever, I don't really see these breaking the last lows of the 24th. They'll come down there, they'll test them out, but then you got a huge, consolidation that's in place. Chevron's down $2, has volume in it. Chevron can get all the way down to we're at $90. It can get down to 78. I know that sounds bizarre, but bottom line is that it's already off. It's already down $8 from its high. So there's action out here in a big way. The Dow stocks themselves, if we take a look at the Dow, I believe the only Dow stock that was positive Well, United Health was positive. That's up $2.19. That's a dead cat bounce. United Health has got absolutely smoked. Microsoft right now is up 3 pennies. That's the leaders. The laggards go like this. ExxonMobil is down 208. You have Chevron down 196. Pfizer's off 62. JP Morgan Chase is down $1. Inside the NDX 100. The NDX 100 was holding up really well until it just decided to fall apart. Yahoo's a leader out there in the NDX 100. That's up $1.88. Qualcomm is up 271. And then you get Liberty Financial, the A shares and the K shares. They're up $1.82. Taken away from it on the way down is C.H. Robinson, a trucking firm. That's an ABC structure on the way down. That's down $4.58. You have Seagate Technologies down $1.94. Micron's off 73, and Viacom is down 198. If we go over and do take a look at Viacom, yeah, she's coming down with some juice. Viacom has a high volume swing low of 45 that she's going after. Right now, Viacom is trading at 47.73. The Walmart. Let's go take a look at. Let's take a big look at Big Blue first, because Big Blue, we had an expansion up yesterday, coming into 15 million shares and did 4. Big Blue's down $1.40 today. We'll see. That's light volume actually on the way down. So we'll see how Big Blue handles the 137.12 area. Walmart. We take a look at Walmart. What you have with Walmart? Oh, Walmart is in trouble, man. So check it out. Walmart is only down 3 cents today. It's off the high from last week of 61. You're at 58. But this tried to get into higher price today, couldn't handle it. Now it's going to try to go blow out that low of $56. And of course, you know, when you pull this back a bit, Walmart has been in a one-way streak from $90 to 58. You know, so there's many of these equities, folks, as you know, I've been basically talking about. The indices themselves are still at highs, but there's many equities that have absolutely got toasted and roasted. And what you're going to see, not just individuals that, you know, basically selling going forward and then taking some of their profits and profitable ones, but what you are going to see, what I suspect will continue to hit this market, is that you're going to have the oil hit it. The larger issue is going to be the amount of hedge funds that are closing. And it's a big number. There's a lot of hedge funds that are closing down. Now, when a hedge fund's close down, folks, okay, they'll do it in an orderly fashion. But guess what? That means that the selling. When a hedge fund closes, has to give money back, that's selling in the marketplace. And, you know, I suspect you're going to see more of that as we keep getting closer. Well, it's not even, we got 20 trading days left. That's what it comes down to. And guess what? When you're talking about billions of dollars, you're talking about moving out some product. We go over and take a look at the XAU. XAU out here, bottom line, rejected lower price out here today. I expect you're going to have lighter volume. The reason I'm expecting that is that when you look at all the equities that are inside the XAU, they've pulled back with lighter volume. Yesterday, you had a nice pop upside. We did 31 million shares. Well, I'll get the volume tonight at approximately 8 o'clock at night. That's where the XAU and the HUI do come out with their volume at those particular time frames. That's the HUI. We take a look at the HUI, the Gold Bugs Index. That also went topside yesterday. Volume out there was nice also. That was 18 million shares, and we'll see what that pullback is. What we are going to have out here tomorrow, which is going to no doubt keep volatility inside the marketplace, is that the European Central Bank, Draghi, is going to come out and say, okay, are we going to do more quantitative easing, less, zero, of all of the above? That is going to, I believe that probably will be done before our markets are opened. So we'll see how that is going to shake out. But what it absolutely is going to do is keep movement inside the dollar and the euro. When you go inside the commodity market out here today, gasoline is down 4.7%. Heating oil is down 4.2. Crude's down 4.1. It's pretty amazing, man. Natural gas, I mean, it just looks like we don't need it anymore. Natural gas is down 2.4. It's trading at 2.19. You get cattle off 2.1. The only thing that is up inside the commodity markets out here today is that you have aluminum up 1.5, but you really don't trade that. You don't trade nickel. That's up 0.9%. Coffee, 0.4. I don't trade that either. Soybeans you can trade. That's up 0.3%. The reason I'm saying that aluminum, nickel, they're not liquid. The coffee, they push that around too much, folks, okay, inside the future markets, meaning that's, if you're a producer, great, you can do something like that. But other than that, I wouldn't be touching it. Volume-wise out here, this is what we're shaking out at. We got 560 million. So what you're going to have here is you're going to have the Dow at a higher high. Looks like it's even going to be lighter volume than yesterday, and a give up on price. That generates lower prices coming at us. The Dow right now is down 117. Nasdaq's off 20. S&P's are down 16. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow down 131, Nasdaq off 23, S&P's off 18. And as we do each and every Wednesday at 30 past the first hour, we get our man, Mr. Darryl Martin. And folks, don't forget, at TFNN, Monday, Wednesday, and Friday, we do 9 hours of live programming. We start at 8 o'clock in the morning, we go to 5 in the afternoon. Tuesday, Thursday, 10 hours. 8 o'clock in the morning, 6 in the afternoon. You can get all that programming right on your cell phone, TFNN.mobi. Darryl's got a great show every Wednesday, Thursday at noon. Also on Friday morning, 10 o'clock in the morning. As you come over to our website at TFNN, Daryl specializes in the Nadex platform. You can test drive this platform by coming over to our website at TFNN, hit that Nadex banner, bring it up. It's a defined risk exchange. Bottom line, in this type of market, there's nothing like it. Daryl Martin, what's going on?
How you doing, man?
Doing great, man. We get some nice volatility out here, pretty intense, no doubt.
Markets are finally waking up, I think, with Yellen testifying before Congress and the ECB press conference tomorrow and NFP coming out Friday and the Fed rate coming out next week. I think we're going to finally get a little volatility back in the markets.
There's big action. There's no doubt. And yeah. I believe that. So tell me the chart I'm looking at right now.
We're looking at the Dow right now.
Okay.
And so obviously had some heavy selling action today coming on down from settlement.
Yeah.
Broke through the ICE volume zone of yesterday. Stayed through it. Come back. Looks like it's going to bounce right off of it. Came on down to half a deviation. Wasn't actually a full deviation move. So there's a lot of implied volatility built in the market right now.
Okay.
I mean, there's a lot of expected movement that hasn't broken out yet.
Interesting.
And I think I think we're going to be seeing that implied volatility break out tomorrow.
Yeah, and that yet is a big word, isn't it?
Yeah, I think it's huge because the market's expecting a lot. It's holding off a little bit. Now the Russell did hit a deviation, as did the Nasdaq and the S&P. So the Dow's the only one that didn't hit a deviation. So I think it's probably pent up with even more downward price action than the others. I don't think it's let go of everything yet. So,
and you know it's amazing. And folks, okay, as you come over to our website at TFNN, Daryl's got a great scanner that you can test drive absolutely free, 30 days. Check it out because if you're trading the Nadex platform, you can trade right off of that. Inside of the scanner, as we were just talking about the deviation points, they're crucial, particularly when you have these nice volatile days. Because you don't want to be buying and selling when the stretch is in the marketplace. Or if you're in a equity, that's when you want to tighten those stops up in a big way, or an indice rather.
Exactly. So you got to, you can look at this right here, came right down to 0.5 and just right off of it.
Yeah, well, you know what's intriguing is that watching, folks, today, so, the oil market was breaking. That hit the S&Ps pretty good, hit quickly, but it took a long period of time before the NDX broke. And what's intriguing is that what you just said there is that, once it did break, because it had gone so high, folks, okay, so the NDX, was up 20 points. Now it's down 25. That correlation is really cool. Because I was sitting there, I'm saying to myself, man, look at this. The NDX won't break. And then when it broke, it really broke, man. I was like, whoa. Yeah.
Yeah, it came down hard.
It did, man. It did.
And I think we have the same thing going on with Dow right now. I think it's sort of lagging behind the other three major U.S. indices.
Yeah.
And I think when it falls, we could be looking 200-300 point move.
Yeah,
tomorrow,
no, it's
easily.
Listen, we went from the Dow Industrials, folks. Okay, the bottom line is that the upcharge was there yesterday, like in a heartbeat. We went from 17,719 up to 17,895. Well, guess what? This was a mind blow. We just did the opposite. We actually got to a higher high today and have given everything up already, which is just a total mind blow. And that signal, by the way, if you, it's one of those. This looks like a railroad track, which is a Joe DiNapoli deal. And then the way that works, folks, is you sell a 0.618 retracement bounce off of this. So this is going to be interesting watching this whole thing shake out.
Well, this afternoon trend, after Yellen spoke, she didn't say a whole lot. But she did, she had a little private, meeting, Federal Reserve meeting, not really private, but
economic, the Washington Economic Club, yes, right.
And nothing really just popped off of her saying anything, but after she was done, it's almost like everybody was disappointed. And then you just got this beautiful, it was a smooth downtrend. It wasn't lightning fast, and it wasn't choppy. It just did its down, pull back a little bit, down, pull back, and there's tons of entries. And when it stopped, it was very clear. It went sideways after that. So, it was a nice trend.
It's intense.
So I love it when the Fed talks.
Yeah.
I don't agree with half the stuff the Fed does, but I love it when it talks.
And no doubt, because, what happens, folks, and if you listen to Daryl's program, right, 12 to 1, Wednesday, Thursday, and we have another program, Tommy, myself, and Daryl, Friday morning, 10 o'clock. You can get it right on your cell phone. And at 10 o'clock this morning, you got to picture something, folks. The Dow's at 2101. We're down 24 points off of that. Now, that acceleration, man, was just as Darryl said. It just the first leg took you from 21.02 down to 2:09.3. You had a slight bounce for 10 minutes up to 9.6, and then see ya, don't want to be ya. It was smooth if you're short.
Exactly. Yeah, exactly. If you're long, I mean, it's like, don't try to be right. Just try to be profitable.
It's intense when you hit these highs, and something like today it doesn't hold. There's a lot to be. Hey, bottom line is that we'll see with this any follow through. But this is early in the week, folks. To have this kind of action, man, and of course the jobs numbers. It's
between Mario Draghi tomorrow and between Yellen testifying before Congress. I mean, the first part will be, everybody will know it, but the second part with all the open Q&A,
yeah,
where they're going to hit her hard with all their questions, and especially the Republicans are going to be trying to nail her to the wall.
Yeah.
And then on Friday, we got NFP. So I mean, it's one of those things.
Lot, huh?
You just gotta, if you'll just follow the immediate trend and not try to take a view.
Right.
But hey, if you think it's going short, if it's showing it's going short, go with it. But if it starts turning on you, just get out. And as soon as it shows it's going long, just go long and drop the opinion and just follow what you see, not what you think. And it'll be a very profitable 2 days.
Yes. Well, and Draghi's, that's going to be a big deal tomorrow. I mean,
every time that press conference happens, man, it explodes.
Yeah.
So I straddle it every week.
Yes.
Not every week, but every time the ECB press conference happens, usually the interest rate is a non-announcement. There's a lot of chatter that they're going to drop rates further because it's like negative yield in Germany, and
I know,
they're talking
man.
about dropping it further. So if they drop it, that'll be explosive. If they don't, it'll be flat. Usually that's a flat trade, but the press conference always big. Now if they drop it and you got the press conference, then I mean it. Just follow the chart and be ready to flip on a dime.
And if you want to, folks, so check this out. So the way that the ECB is working right now is they can buy 30% of every note that's out there. Okay. Well, what's happening is that they're getting up against that. They almost own 30% of many of the notes that are out there. And that's why Europe is in negative rates. So this is what's going to get really intriguing tomorrow morning is like, okay, what kind of firepower are you going to use? Because in Germany, you can give Germany money, or you can buy a 5-year bond, and it's going to cost you 0.2%. You got to pay them. That's pretty sick, man.
I know. And literally, like, put your money in the bank and pay.
And pay. Yeah. 5 years,
you make more
man.
By keeping it under the couch.
Unreal. Listen, man, have a great one. Have a safe one. Of course, we look forward to the show tomorrow and all your great setups, man.
Thank you.
Thanks, Darryl. Have a great one, man. You stay right there, folks. We're coming right back. This market's going to get hit hard coming into the close.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. You have the Dow right now off $149, Nasdaq's off 27, S&Ps are down 20. And if we go inside some of the higher volume equities, and it's a light volume day out here, folks, big time. So you went to higher highs, you have lighter volume, give it up in price, give it up in volume, that's a failure. Freeport McMoran, that's down 45 cents. Kinder Morgan is down $1.74. These oils, we're going to see some heavy destruction inside the oil services, folks, because you're talking oil at, we broke a B point. That oil goes down to 35, and if it stays down to 35, we haven't stayed at dramatically lower prices for long periods of time. You know, it looks to me at this particular point, technically, it wants to go down there. Fundamentally, we have so much oil, it's amazing. I mean, it's just a mind blower. And the gas market itself is basically projecting that, guess what, things are cheap. You had Netflix is a good mover today. That's up 383. Qualcomm's up 278. Yahoo is up 215. If you go over and take a look at a few of these, though, if we look at Qualcomm first, you're going to see it's a dead cat bounce. You know, Qualcomm is at $50.07. Qualcomm, folks, okay, this is the first time it had any kind of a bounce since $81. Okay, it's dead in the water in a big way. Pretty intense, actually. The Yahoo, what's happening with Yahoo? They have a board meeting going on. Yahoo, big volume. You're up $2. We hit 36.39, which is over the swing point, so that'll get tested again. That being said, bottom line, same setup. Yahoo, dead cat bounce. You're down from $52. That's a dead cat bounce. You know, that's just how that baby is set up. So when you do take a look at the NDX, you still got a huge amount of weakness inside that NDX. We take a look at Apple. Now, what you have with Apple is this. It's down 93 cents. That's not a lot. The volume is not huge, but it can't hold price. It can't hold the 119. You're at 116. So what does that set up? That sets up that Apple will try to run after its last swing low, which is 114 to 111. Now, Apple itself, folks, because of the weighting structure inside the Dow, inside the S&P, and the Nasdaq, is going to be a problem just in the context of markets. The largest problem for the S&P out here are going to be the oil stocks. Once oil broke that barrier, that $40 barrier, which it did today, has the volume behind the move. That's like, okay, how are they going to handle that lower price? You know, we'll find out. And of course, the wild card out here, no doubt, it's going to be that dollar. When you put it together, you know, we were just talking with Darryl about bonds. So this is what, you know, I was talking about this. Tom and I, my son Tom and I, we do a program at 10 o'clock in the morning. So the hardest thing that I'm having to get my head wrapped around is this, folks. It totally makes sense that the Fed goes up in rates. As the Fed goes up in rates, that would make our dollar stronger. Bottom line, right? That being said, the 10-year and the 30-year continue to go up, and meaning it's going up in price, the rates are getting lower. Okay. Now let's go over to Europe. When you take a look at the aspect that in Europe, I'll just talk about a 10-year rate for a second. So the 10-year rate, you buy a 10-year bond from the United States, you're going to get paid 2.1%, okay, for 10 years. You buy one from France, you're going to get paid 0.7%. You buy one from Germany, you're going to get paid 0.4%. Now, that's a disconnect in itself, because when I look at the world and I use my common sense, it's like, okay, do you want to be in the United States or do you want to be in Europe? To me, that's a no-brainer. I'm prejudiced anyway, because from the United States, right? But bottom line, that's when I try to look at it, it's like, okay, that makes sense. Now watch when you do this, though. When you bring the rate structure down to a 5-year, this is where it gets totally whacked out. On a 5-year, we buy a 5-year bond, 5-year note from the Treasury. We get paid 1.6%. If we buy a 5-year note from Germany, we have to pay them 0.2%. If we buy one from France, we have to pay them 0.48%. That's where, when I look at the structure, I can't see the correlation of how the Fed can go up, but they will, versus what is happening in Europe. You know, so what's really cool, and one of the Tigers, when I said that the dollar's done, he says, well, it depends on what Draghi does. Now, this is, and I think that what's really cool here is that I have a feeling that what very well may happen is that he may do nothing and say that they have enough right now. And if that's the case, what we will see is that we will see the dollar go down, the euro go up, and that would be the beginning of the end of monetary easing, which we'll find out tomorrow. I mean, I think tomorrow is going to be a big number for that aspect, you know. Now, when you get into the rate structures, as I said at the beginning of the program, if you listen to what Yellen actually said, I think it's pretty dangerous. I think it's real dangerous, actually, as to the aspect of where these rates, how the Fed wants to go up. Where very well could be still a disconnect is that it's not the short-term rate that generates the mortgage rate. It is the 10-year. And the 10-year right now still wants to go higher in price, lower in yield. So there's going to be, we're all going to learn quite a bit out here. And what you definitely want to do, folks, is you want to stay on top of it in a big way. I mean in a big way. If you're looking for a new house, if you're refinancing all that, I'd do it. I'd do it, man. I mean, when you look at this, you know, when I look at it, 4% mortgage rates are great mortgage rates. Is that going to be the low? You know, the way the 10 years are trading, it's looking like it's not. But why risk it? Our phone number is 877-927-6648. Yeah, they're selling them into the close. You know, this is a. If you were listening yesterday, and this is where it just comes down. When you see these spikes in the marketplace, this is what happens at highs, man. It's really wild watching. The spikes that we had yesterday coming into the close, you know, bottom line, you know, just didn't have the juice. But guess what? They got it going. They got it up. They got it over it. And that's just kind of how markets rock, which is just a mind blower. It's like, how the heck does this happen over and over and over again? But that's what it does. That's what markets like to do. That's what they do at highs and at lows. You know, how the NDX is falling apart is really intriguing. You know, because that, as I said, we were talking with Darryl, the NDX was holding up really well. And once it went, though, man, I mean, they just threw everything at it. Percentage-wise, it's still not that bad compared to the marketplace. But we are trading where we were trading at 0500 yesterday morning. And you know, it's not done. This thing wants to break into that 46.78 area. You know, and let's see. It has plenty of time. It's got 10 minutes to do that. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials are down $1.60. You got the Nasdaq off 32. S&Ps are off 22. We're gonna be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. You get the Dow down 171, Nasdaq's off 36, S&Ps are off 23, and we do look at these benchmarks. Bottom line, S&Ps are taking them down south big time. The benchmark on the S&P is the SPY, that is 209.49, and you're a buck underneath that. This had a big move, man. The movement inside the SPY, it literally has just taken back the last 10 trading days in 6 hours, and you still had a higher high with lighter volume. That's pretty amazing. The Qs, the NDX 100, this has been teetering at that benchmark. The Qs right now are below it. Just subtly, but below it, and they're below it with lighter volume. So you went to a higher high, you couldn't handle it, you come down. What does that set up? That sets up, it's going down south. You know, we're at 114.46, and I suspect the Bulls and Bears will fight over this 114.51 area. We'll see, as we're talking, it's 114.49. There'll be a fight over this area, you know, so we'll see who prevails as it comes into the closeout here. The gold contract, that's down. Let's go to gold for a second, because this is going to be going tomorrow morning, when you're closing at lows, it's always dangerous. And what gold has done is this. It's at its low, and it has some juice. Now, it's fast price destruction with lighter volume. You know, that's a positive. You hit the 1,049. We're at 1,051.90. So technically, this would be a failure of lower price with lighter volume. That being said, knowing the gold market well enough, this thing, I suspect, will spike lower tomorrow and probably reject the low. You know, because it's really unusual. Well, it's very dangerous. Let's put it this way: when you close at lows, that's what it comes down to. So let's go look at the GLD. So the GLD. Yeah, the GLD had 9.5 million shares. Yeah, the GLD saying, hey, man, this thing's going to go lower. That's what this is saying. In fact, you can make a case that it's a small ABC down. The GLD 104 to 100. Let's see, 104.09. So it's 3 points, which wouldn't be bad. That'd be 99.43. 99.43. That'd be $1.30 down tomorrow. Yeah, so when I say it isn't bad, because of the fact I love how the equities are trading, folks, the gold and silver equities. That's just really wild, man. I mean, you got gold, let's see, even Gold Corp. Gold Corp's only down 29 cents. And Gold Corp, by the way, if you do happen to own Gold Corp, this has been the dog in the marketplace. And it finally, you know, basically perked up. It perked up on Monday and Tuesday. You get some action, and this is not pulling back with volume. You know, yesterday we went up with 7.3 million. Today you get 5.6. So the way that's acting is it's also saying, guess what? The equities want higher price. I suspect the volatility is going to be huge, man. I mean, just how this market is traded out here today, big time. And you got to remember something. We're in window dressing. So bottom line is that we have window smashing today instead of window dressing. So the market couldn't even hold up with the amount of IRA money coming into the marketplace. And what I expect that's all about, of course, is that the market recognizes now that rates are going to go up. That's what it seems like. You know, there's always a speculation saying, it's built in, it's built in. Bottom line, if I've learned anything over the course of the years, it seems like, you know what? It's never built in. What seems to happen is that they say it's built in, and then all of a sudden the reality comes up, and guess what? There's either buying or selling, and it's extraordinary. You stay right there, folks. When we come right back, so we got more numbers coming out after the close. Dow Industrials down 168, Nasdaq's off 36, S&Ps are down 22. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
I am, thank you. I was really just commenting on the fact that I'm really enjoying the new format with you being there when the market's still open. You've assembled a great group of people. They're all great technicians. I'm just so glad that I first caught you on the radio with your little tiger growl. I'm like, who is this guy? And it got my attention, and it's really made a positive change in my life.
You're awesome, man. Thank you so much.
Now, Tom O'Brien.
Folks, this is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Those who don't believe in magic will never find it. Market-wise, let's take a look at it out here. We have the Dow Industrials down 158, Nasdaq off 33, S&P's down 20, gold contract down $11.90, traded 1,051 an ounce. Gold, folks, is pushing on its bottom. on its lows, had 113,000 contracts. Now, that's light volume, but you had fast price destruction. It looks that gold more than likely is going to spike lower tomorrow. I expect you'll see a rejection of lower price, but the way that it's just laying at those lows, it looks like that's what it wants to do. Silver, down 9 cents, $13.98 an ounce. Platinum is off 8 at $8.30 an ounce. Copper is down 2.5 pennies at $2.04 a pound. Light sweet crude, okay, light sweet crude, folks, broke $40. You're down $1.70. ABC structure on the way down. It broke its B point, broke it with volume. You get a price projection of $35. This is going to be pretty intense, man. When the oil market did break, bottom line, that is what started taking the S&P south. All the oil stocks went south. Oil stocks are a large weighting structure inside the S&P. That's what took it down. Looks like we're going to have very inexpensive energy this winter. Bonds, the 10-year down 9 ticks, 126.21. That wants higher price, lower yield. 30 up 5 ticks, 156, same setup there. The 30, folks, is almost at its highs. Good old King Dollar. King Dollar up 185 ticks, 100.02. Now, that looks pretty good. Bottom line, King Dollar was up 500 ticks. Now, it had juice behind the move. You did 36,000 contracts, so that's a big number. That is saying get a test of that number once again. I suspect what you're going to see, however, is you're going to see lower price. More than likely, we're going to see it tomorrow. And where I'm going with this whole deal, folks, is the European Central Bank. Draghi's going to be coming out tomorrow morning. What the statement, the speculation of the statement is going to be about is that there's going to be more monetary easing in Europe. The way this market is set up, it doesn't look to me like that is what is going to fly out here. The reason I'm saying that is that you have negative rates in Europe already. Our bonds are going higher, lower yield. The dollar is at highs, no doubt. If, in fact, Draghi comes out and does more monetary easing in Europe, you're going to go from negative, the 5-year negative rate right now in Germany. If you give Germany 5 years for a bond, you have to pay them 0.4% per year. Okay, so that's you're paying them 2% of your money over the course of 5 years just to hold your money. You get nothing. Okay, so when I look at that and look at the aspect that, okay, are they actually going to go and do more monetary easing in Europe as we are going up in rates? I can't wrap my head around it. I just, so I can't wait to see what happens tomorrow because, every which way I spin that deal, it's just like, if that happens, guess what's going to happen? What simultaneously would happen is this. Picture that we're all in Europe for a second and we're big corporations. Where would you put your money? Immediately, you'd be pushing as much money as you can into the United States. Why? Because two different things ends up happening there. If the monetary easing goes further, your euro goes down. You're already getting negative rates. The dollar goes to the moon. We're getting positive rates. What's going to happen? Well, what would seem in a common sense way would happen is that huge amounts of money would come into the United States, into the bonds, bringing our rates down also. So, hey, we'll see what happens. But that's why I think we all love markets, because we're going to get a really sweet learning curve, folks, in, I would say, the next 6 months to a year in all of this, because of the fact, number one, that, we went through a depression. You had the monetary easing. It's like no one that's alive at this particular point anyway really knows, hasn't been through that cycle. That's what it comes down to. So it's going to be cool watching it shake out. Euro's down 19 ticks at 106, and the yen is trading at 123.23. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Can you spell failure? That's what you have, folks. You got to a higher high. S&Ps, the SPY got to 211 today, closed at 208.52. Benchmark that we've been talking about, November 9th benchmark, that was 209.49. You closed below it. That had 131 million shares, so what do? You went to a higher high, had lighter volume, closed underneath it. That's saying market wants to go lower. Last swing point in the SPY, 202.18. That's where this thing, I suspect, is going to make a run down to. NDX 100. Now, the NDX 100 took a while to break down today. NDX 100 was strong all day. The Qs, they went to 115.75. The benchmark is 114.51. 33 million shares. Same setup, folks. Harmony in the marketplace. You went to a higher high. You closed underneath it. You had lighter volume. We had lighter volume, folks, by 10 million, or 33% in the Qs. There's no buyers up there, man. There's sellers. Distribution in spades. Bottom line, both those indices failed on price, failed on volume. Small caps. What do we have with the small caps? Small caps got to a price point out here today of 120.04. Bottom line, that also got over the November 9th high, closed underneath it, did 22 million shares versus 32 million, 33% less. All the above, bottom line, what does that set up? That sets up lower prices coming at you. Oil. Oil market, folks, is in trouble. The oil market out here today had wide price spread. We went from 41.97 to 39.84. You had 518,000 contracts traded, and bottom line is that this is an ABC structure on the way down. And so we broke the last swing low out here, which was August 24th. That swing low is 39.97. We hit 39.84. 35 bucks coming at us, and that's going to be really wild. If we actually look at a continuous contract, the continuous contract, I believe, is 32.40 that we hit in 2008. Let me just see this. Yeah, 32.40 was hit in December. Oh, that's really wild. It was December, too. December of 2008. Hey, it's out there. It's out there for what? It's out there to get hit. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today.
An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish down 158, Nasdaq down 33, S&P's off 23, off 18 rather. And now, folks, let's go to our man, Mr. John Logan. Now, every trading day, folks, 8 o'clock in the morning, John kicks us off. It's an amazing show. He goes over the indices. He goes over the world markets. Bottom line, fabulous show. Great way to wake up in the morning, 8 o'clock in the morning. Now, no matter where you are in your car right now, remember that you can get us 24 hours a day on your cell phone. It's TFNN.mobi. That gets you the audio. You want to get the TV, just go to TFNN.com. Now, as you come over to our website at TFNN, you're going to see right in the very front the TAS Market Scanner. You can come test drive this outstanding piece of software right here, right now, absolutely free. You hit the scanner, and what you're going to see is that 14 days free. John also did a webinar that you can go over in many times so you can understand how this works. Fabulous piece of software. You know, if you haven't been in the Tiger's Den yet, it's a good time to test that too, because we have a lot of great traders in the Tiger's Den. Bottom line is that we're looking at the scanner, and you know, when you talk about the E-minis, folks, and he has these breath clocks in here, and when they cross, okay, which at 13 hours today, 13 past 2, that 240 was crossing, and baby, that is saying, guess what? You better not be long. You better be shot. Our man, Mr. John Logan, he actually, I believe, was flying from North Carolina to London today to do a workshop for Bloomberg, right, John?
Hey.
What's happening, man?
Yeah.
Are you in London?
Actually, yeah, I'm in London right now. I hadn't slept in a while.
Well, you're a trooper, man. This is unreal.
Well, you know, the conference tomorrow is an emerging markets Forex meeting. It's going to be so interesting to me. I'm talking about, you know, how to maybe possibly create some more volume in some of these, like Zimbabwe cross with, you know, Russian ruble type things.
Oh, really?
Oh, yeah.
Wow.
There's just, yeah, it's going to be really, really. There's some high level dudes here. I mean, you know, I'm doing some, you know, when you get on the stage and it's kind of like a panel talking.
Yeah.
The guy I'm speaking with is, man, he's just, you know, he's Mr. Fix Connection, which is a banking protocol for application programmer interfaces, which, you know, banks talk to each other on. It's the de facto banking protocol, which actually all trading engines use. So like when you're using Thinkorswim or, you know, whatever out there.
Yeah.
You are sending trades over fixed protocol language. So these guys are going to be on stage. We're going to be talking about this. We're going to be talking about trying to hook up different venues and you know, just it's going to be, you know, there's actually going to be hundreds of people there on that same level. And, you know, London is a great town. If you've never been here, man, it's kind of like Boston. It reminds me some parts of it like Boston, you know, just really historic. And
you know what I love? I was so lucky because when I was 30, folks, I did business with Sir Brian Wolfson, who ran Wembley. And so picture this. This is crazy, man. I did business for him for 10 years. And of course, I wasn't even into soccer. And he had me over there for the World Cup. So I was like, wow, this is a trip, man. Do you know what I mean? But you know what I absolutely love over there? And Knightsbridge, all those white townhouses, it's like, oh my God, they're so gorgeous. And now, of course, they're millions and millions of dollars, right? I mean, that's where everyone wants to live. Wow.
You know, if I could live right here where I'm at right now, I might do it. I mean, I'm over in Kensington, which is
Right.
Right next to Hyde Park, actually.
No, I know. I spent I spent a lot of time over there. Well, at 3 or 4 days at a clip. Do you know what I mean? He'd had me go over and come back and go over. It was easy though. It was only 8 hours from Boston. You know what I mean?
Just awesome small restaurants everywhere. You know, just man, it's just a
all those
great
wine bars, right? I remember there was wine bars everywhere, man. You know.
Don't get me started. Yeah. Don't even remind me that they're here. Hey, listen, but you were talking earlier about the breath crossover.
Oh, you should have seen us in the den. We were having a field day, man. Yeah. It was great.
I mean, the 60-minute crossed over early,
yes.
And that was. And I want to show you something. There is the. I'm gonna blow this up a little bit. I'm showing the guys in the den this. There's that crossover happened sometime between 10 and 11 today.
Look
on
at
the
that.
60-minute. Yeah. But at the same time, and we always talk about this is almost a day trading system in itself. And it's been a little mixed up lately, which is kind of a little bit foreboding news there. But we go to the 60-minute chart, and at the same time that was happening, we started breaking below 60-minute profiles. And you know, when that happens, I mean, there's a possibility of a short-term trade going on.
Right.
The long-term breaths are still. I mean, the daily has really, along with the weekly, got the wind sucked out of it. I mean, I've never seen something change this quick in one day, actually, on these two time frames.
Okay.
Look at that. I mean, we are barely below, and this is what you want to see for a market turn, actually. Now, I've been relatively, the thing's kind of sitting on the launching pad, possibly ready to go higher. I was just thinking if I'm short, I'm really kind of concerned the past week or two.
Let me tell you, man, yesterday, so you get a picture of this, folks. I have all different schedules. I mean, what ends up happening, just like every other trader, whether it's 5 o'clock in the morning or 11 o'clock at night. So I switched my schedule again, right? So now I listen to you at home and I do the newsletter at home, right? And yesterday morning, right? And what happens, folks, is that in the morning, I like standing up, because of course when I'm doing the program, you're always sitting down. So I'm standing up, I'm looking at the S&Ps, man, and I'm listening to you, and exactly what you just said. That hey, man, this thing has held us pretty tight. This thing's going higher, and I'm saying, oh man, of course I got my bear claws out. I'm saying, yeah. And needless to say, I come into work. And I'm cursing you, saying, oh, man, I bet Logan, man, I kept this market up. I'm telling you, folks, I know this sounds insane, but I'm telling you, man, I talk to myself all day like that. And anyway, no, seriously.
I can kind of hear it somewhere in the ether.
You got a great show, man. I'm telling you, man, you got to listen to the show, folks, kicking off, man, because it's the lineup we got's amazing. But anyway.
Sometimes I think I'm a little too factual based. I look at the technicals.
No, that's good. I think it's real good, man. It keeps everyone straight. It kept me straight. I did all right yesterday, but it doesn't mean I liked it, but it was all right. But you know what I'm saying? Because I'm saying to myself, the market should go down. We know that it doesn't matter what you think, folks. The bottom line is you always protect yourself, money management wise. So.
And a lot of times, that thing that happened yesterday, and then the kind of reversal today. That is not cool for guys that are long now because, we talked about, before this kind of action, launching pads, spinning around, usually it kind of like, let's get some people out before we, take it down or whatever. And that could have been, what's going on here. And as you look at this breadth on the daily, these dailies are significant crosses. We had a big one on November 8th. And then we kind of cross back positive November 18th. This is a way to trade your entire stock portfolio. It's just looking at these crossovers and also looking at, where is the middle ground? Now, the middle ground right now, too, is getting kind of populated. When I say the middle ground, there's a lot of stocks in the balanced area right now, 260, right, out of the S&P 500. So over half the S&P 500 is literally in a balanced state. But now you've got some of the stocks starting to nibble on the short side. And that was kind of a not that type of scenario before yesterday morning.
I'm gonna show you something in your own software that's just an absolute mind blower. And
I'm gonna show you something too. You're gonna freak out.
Yeah, that's a beautiful thing. Yeah. Let's do that, man. You stay right there, folks. John and I are coming right back. Dow finished down 158, Nasdaq off 33, S&P's down 18. We're gonna be right back, folks.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're talking with our man, Mr. John Logan. And don't forget, folks, every trading day, 8 o'clock in the morning, we kick off TFNN. You get us right on your cell phone. John kicks us off. So, John, what I wanted to just bring up first, and this is just amazing, man. So, the way the scanner works, folks, okay?
Man, I feel good over here, Tom. I love this town. Just want to say it again.
I bet, man.
Keep going. Keep
and
going.
What's it's like? Was it 11:30 at night there?
Actually, it's 9:30.
9:30.
Right in my wheelhouse.
Cool. So Monday, folks, okay, I go short DuPont, right? Now, the scanner picked it up. You know, I do the volume deal with the scanner, but bottom line, it picked it up, right? Well, yesterday, you know, Tommy and I do a show at 10 o'clock in the morning now, right? And folks, you got to picture this. The Dow's up 163, right? And I'm saying to Tommy, I says, you know, man, I can't believe this, right? You know, that the Dow, and guess what? DuPont there was only 2 stocks that were negative, and DuPont was one of them. I cracked up, man. And that's how these profiles are a trip, man. I couldn't believe it. I mean, I figured, I actually, it had gone so quick. I says, oh, man, I'm probably stopped out of DuPont. Bottom line is that it was down, which just blew my mind, man. You know, it was so cool. And it hasn't. Go ahead.
Let me blow your mind even more completely.
Good.
All right. So we've got these custom sorts that we put in, and actually we got a new version coming out tomorrow for everybody. It's 4.1. I think we're on 4.0 right now or something. We got a 4.09, but we've been testing with that. So these filters, the breakdowns, the breakouts, the uptrend resistance, all the uptrend reversals, all that. They're going to even be more stingy with their picks. So you're only going to get the choicest in the algorithm amount of solutions for that particular algorithm. And actually, the formula for these is going to be posted up at the top of the screen, or a way to get to that formula. Like, what is the formula for these? So you're going to know, like, in layman's terms, in paragraph kind of format, what's the secret sauce behind the,
which is so
why
cool.
we're picking these things.
Yep.
But what I'm going to show you is, let me go back to our dashboard for a second. And this is for everybody listening to this. This is just, it's got a way to find key reversals based on fake breakouts or breakdowns that have happened outside these balanced areas.
Yes.
Okay, and the way we do that is we're going to go sort our column. And what that is, sorts by color, then by trend. I don't know if you even know about these arrows, Tom.
I do. I was listening to you. There was a good call the other day coming in, and you were explaining the gray area and the yellow coming off it and what to look at. Yeah. So.
Right. Okay.
Yeah.
Okay. So we've got this feature that's when it says top one and arrow up. What that means is we had a breakout outside of profiles.
Yep.
And then we're reverse, and that was the previous week or previous day or whatever time frame you're looking at.
Okay.
Then we're reversing back into the profile after that breakout. And I know a lot of folks out there, they've
false break, right?
Oh God, let me be the guy who buys the high print. I mean, I've been there, done that.
Yeah.
It's a bad feeling. And a lot of these platforms out there, and they're like, oh God, we're breaking out. I'm like, okay, yeah, let me be the, the story on stuff like that.
No, totally, right.
Yeah, so this tells you when you got those reversals. So if I go in here and look at, let's just pick one that everybody knows here if we're sitting here. Ones that are hinting at this. So let's just look at BXP, Boston Properties.
Yeah.
BXP. All right, so this is saying we've got a little situation here. Here it is. See that?
I do.
We're hinting that we're coming right back down back into the profile, and it's something to put on your radar screen.
Oh, it is, man.
Yeah, but if we get even farther down, it'll kind of go off of that noise area, and then it'll be full-blown, like you might start exploring more south side movement. So these are things that, little innuendos that are happening in the scanner. We talked about this the other day, but there's just so much information here. I mean, a lot of guys just use it to literally get the tie to the marketplace with these odometers up top.
Yes.
And then they can kind of act accordingly on either their own custom portfolio. One of the things I like to do.
Which is smart. Yeah, no, I can see that. Right.
I like to find things that are acting a certain way, dump them into a custom list.
Yes.
Like, I think I have one here. I just called this one key reversal. Right?
Okay.
So Coca-Cola was on that list, right?
Yep.
Clorox was on that list. Things like that. And I dumped them in here just to kind of monitor them in a little basket over here to see what happens later.
I see. Interesting.
And a lot of these sorts, like, we'll put in breakouts here. These are, stocks or instruments that are confirming past the noise area, breaking out of the profile on the upside, and clearing clean of, and I will look at one.
Which is important, yeah.
Yeah, on a weekly. So that kind of invalidates the possibility of the key reversal killing you.
Right.
So here's Cigna. Boom. We're getting out of profile. Market got killed today.
Yep.
We're kind of sitting right up there in the launching pad. This one might have.
Isn't that amazing, man? Yeah.
A lot more juice to it, and guess where the targets are initially? 10 or 12 points higher, which is a 10% move in the instrument.
Right.
I mean, and you could at least put this on the. I mean, 10%. If somebody's going to complain about only making 10%.
In a down market, yeah, or a flat market, take a choice. No, I'm with you, right.
Yeah, this stock was actually up today.
Yeah, I know. I saw that. We just put up. I know, man. It's amazing.
Yeah. So, it's an incredible tool. When am I coming home?
You're not.
I think I'm coming back Saturday.
I am.
And,
okay.
Yeah, we're going to try to do a show tomorrow from the conference event.
Okay.
It's just going to be 2 in the afternoon. So if you guys catch the show in the morning, hopefully I'll be wired up and maybe Bart Chilton's going to be there. I know him. He's on the board of directors for Next Change now, which we're doing a lot of software programming work for.
Oh, cool.
I'll try to get a good interview.
That would be great. Yeah, because you'd be up. And I don't do the 8 o'clock in the morning show, man. You'd have to be up at what? Forget it, man. Yeah.
No. It's going to be 2 p.m. here. in the afternoon.
Oh, cool. Oh, I see. Yeah. But that does something too. Okay. Yeah. Hey, we'll see what happens. That's cool. We have your scanner. That's all we need. I'm only kidding.
Well, just another story about the scanner. We turned on real-time feed for Hong Kong and the Nikkei. All the U.S. stuff, all the U.S. futures are real-time.
Yeah.
The U.S. stocks, that's the critical things that people want that we talk about on the show. But we've kind of debated on whether to just crank up the real-time feed to have these real-time price derivatives on the rest of the world. But we've added real-time Hong Kong and the Nikkei.
That's huge, man.
We're going to add it. And we've added to Shanghai real time too, if anybody's trading Shanghai stocks.
Because folks, what happens here, just so you understand, you can test drive it for free. The quotes, there's no, you're not paying for quotes. This is like insane. Because quotes are so expensive, it's unbelievable, folks, okay? Hey, what do you think about the, and the way you test drive it, folks, just come over to our website at TFNN, you're going to see it right on the front. Oil broke down kind of nice here.
Let me take a look at it. I was kind of all over the place traveling today. Let me let's take a quick look at it.
Get the cream cheese out, man. It's toast.
Yeah, you know what we talked about here? And I'm going to pull up the scanner initially. I'm going to go to the futures section.
Okay.
And by the way, guys in the car, hey, God, I don't want to pay for futures quotes. I never trade them, whatever. We give you futures on here. We give you Forex products. Now we've got the big 6 currency futures off the CME exchange on here, in addition to about 3,500 now instruments that are global.
Hey, you can stay with us, please? Yeah?
Sure.
Awesome, man. Yep. Stay right there, folks. John and I are coming right back. We had the Dow finish off $156, NASDAQ down 33, S&P's off 16. Check it out. TAS Profile Scanner right in the front page of TFNN, folks. We're coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. We're talking with our man, Mr. John Logan, who kicks us off every trading day. And as you come over to our website, folks, at TFNN, what you're going to see on the very front of the page is that we do a Tiger Dollar sale a couple times a year. In this particular case, the way Tiger Dollars work is this. Any subscriptions you have at TFNN, they're good for. No expiration date, totally transferable. It's a bonus match. That's what it is. The way that this works, this particular promotion, it goes from now until December 21st. It's a 25% bonus. So if you buy $500 in Tiger Dollars, you end up getting $625 in credits that you can use anything that you have or may get in the future. If you buy $1,200, you end up with $1,500. You know, bottom line, you're getting that 25% bonus on anything you buy. Now, that's the first part. The second part goes like this, being the holiday. We've done this a couple times before. On the cash value that you're buying, anything up to $1,000, we are donating in your name 5% of that to the Salvation Army. Anything over $1,000, we're donating 10% of it. So to just give you the idea, if you're buying $1,200, you end up getting $1,500. What end up happening, we will donate to the Salvation Army in your name $120. Salvation Army will send out to you the donation certificate so you can write it off on your taxes. Great time to do it. John Logan. Okay, so I'm looking at all these. Look at these. I'm looking at all these futures, man.
All right, yeah, we were talking about crude oil. Let's stay on that.
Yeah.
All right, so right now I'm at the scanner and I'm seeing a little sea of red here.
Yes.
What this 4 means in a deep red cell is saying we've been 4 weeks into the latest breakdown below the balanced area. Now we've been, and there's a landscape chart. There's that inflection point. It broke below 43.43 in the January contract.
Yes.
We've been talking about on the show every morning. It probably ain't a good idea until we get some confirmations, at least getting back above some of these, you know, either back into
inflection
the
points,
profile, yeah, or even start breaking above the dailies. That big area between 42.91 and 43.43 has really been where the level of the market needs to get back above to really start feeling good about the long side on this. And what I want to do is I had the Aussie dollar up. I want to talk about that too, because that's one we've been pounding the desk on about going long.
Yeah. Well, that's going to get interesting, because I know between the Aussie dollar and the Canadian dollar, and that's what's like, okay, so what's going to happen with our dollar? It's wild, right? I mean, Draghi talking tomorrow. There's going to be nice volatility, man. You're going to be right in the middle of it.
Exactly. So we close below. Here's those 4 weeks I was telling you about. I'm showing the chart now. Close below. Go back and retest it twice. Couldn't even get a close or even hardly a print above that area. Those are what we call. Let me see if I can get my chart back up. Somebody's saying my chart's not up. Let me redo this. Okay.
Bingo. Got it. Yep.
And as we close below, the really powerful trading signals is when you get outside these profiles into an imbalanced situation and go back and test that inflection point that you use for the breakout. And that happens.
Okay.
By default, by definition, you're looking at this from the short side, right?
Yes.
Now, crude oil, you know, not a big divergence in price action versus our navigator here, but right now it's just not probably, you know, in my mind, a good idea to start even nibbling on crude oil down here. It's probably going to do one of these things where it gets everybody out before it starts turning around now.
Yeah, no, I can see it. And I wouldn't be going short now anyway. I mean,
no.
It's got wrecked. But
it's kind of like a wait and see if we go higher, or wait and see if we go lower right now.
Yeah. I mean, the amazing part is that, you know, for all the folks in the Northeast and the Midwest, I mean, heating oil is going to be very inexpensive. Let's see, heating oil out here today, wholesale's $1.31, folks. It was down 4.5% today.
That is incredible.
Isn't it, man?
Yeah.
Hey, you know what I was digging yesterday too when you were talking about the soybean crush and the elevators, man. That was great information, man.
Yeah, well, I mean, a lot of my family, I mean, this is kind of in my backyard, really.
Yeah.
They're involved in farming. A lot of my friends either own or run elevators.
Okay.
Grain elevators, dryers, things like that. And in the southeast area, which is kind of where I'm usually stomping around.
Yeah.
A lot of the crop, there's an 8% damage rate where when they go to sell beans to the elevators, the farmers, when it stops raining, if it ever does in the Southeast, everybody's scrambling to try to get stuff out of the field because they think it's going to rain again. Well,
okay,
a lot of the bean crop really is over 8% damaged. It's either some kind of mold or just malfunction in the bean itself. So
yes,
that brings the price to the farmer. As the more percent it gets higher damage, it's like a parabolic curve. The less they actually get for the thing.
Right.
It doesn't go in a linear rate. It goes in a parabolic bad rate.
Wow.
So, the elevator guys are trying to find good crops of beans
to
that
mix them.
to kind of mix and get the balance right and stuff like that. And they're having a super hard time doing that. The Southeast is not the grain belt of the U.S. by any means, but it's something to pay attention to. I've been really bearish on beans. With all the fundamental stuff. I mean, Andy Heck talks about it all the time. There was just some massive crops out there.
Yeah.
But let me pull up the
But that being said, I was looking at it, man. It looks it's possible that those things are bottoming out, man. I was digging it, man.
Right after we started talking about it, it started kind of bouncing.
I know.
And it cleared 872 and went back and retested. And we talked about the next stop up's 907 now.
Yeah.
And why is it 907? Go back to the scanner. Go to my futures section, and we got these ordered right finally. So let me go to the top and look at beans. There's that 907 area as I mouse over this cell. Now that arrow down
look at that.
means that we're still in a downtrend, and we should be selling that 907.
At 907, that's cool. Yeah, which makes sense because you got even then it's interesting. 923 is wide open too. Interesting.
But there's been some trading opportunities with this little green 5-day. So, I mean, you got a little contra trade going on here, but 907, if you're going to get long beans, that's your initial target. And you could consider laying the wood to the short side at that point with some stops above, of course.
Yeah, that's pretty amazing, man.
Loved it, man.
No doubt. Well, listen, folks, you can come over to our website. You can test drive the scanner right here, right now. And, of course, don't forget, every trading day, 8 o'clock in the morning, you're going to love it, whether you're at home, you're in the office, you're at work. Bottom line, check it out right on your cell phone, tfnn.mobi. It'll bring you right through all these markets. And so...
I got to tell you something funny from here. Every time I hear the word DuPont, when you were bringing it up earlier, you remember that commercial they used to have? I think it was in the late 60s, maybe in the 70s. Their slogan, you remember their slogan?
I don't, no.
Better living through chemicals.
Oh, my God.
Do you remember that?
That's heavy, man.
Yeah, and I was thinking how unpolitically, just wouldn't fly these days. Only Trump could get away with saying that. But every time somebody mentions DuPont, I always think of that slogan they used to have.
Well, listen to this, man. This is pretty sick, folks, okay? Yesterday, I'm getting ready to go to work, and, the Scott Chemicals outside doing my lawn, right? Mm-hmm. And I walk outside, and he says, "Man, you better not go in the back, man. I got my German Shepherd in there. Don't think you can walk in that back door." And so I go outside, man. The guy doesn't even have a mask on, right? And all I can smell is chemicals. And I was looking, I'm like, "Oh man, you got to put a mask on or something, putting this stuff down, right?" It was so weird, man. It was like I was even looking like, man, I'm throwing this stuff on my front lawn. It's like, ooh, I don't know.
He's got like 8 fingers.
Oh, man, pretty sick. Well, listen, man, you have a great night, safe night, a great, conference tomorrow, and we'll talk to you tomorrow, man.
Thanks, Tom.
Thanks, John. Have a great one, man. Have a safe one. You stay right there, folks. We'll come right back. Dow finished down 158. NASDAQ off 33. S&P's off 16. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. So AVGO, let's go take a look at some numbers out here. This is AVGO Technologies that closed at $132. Right now that is trading at $142. You're up $10. And numbers go like this. Okay, the net revenue is $1.8 billion. The estimate, let's see. Earnings per share was $1.49. Fourth quarter, they figure they're going to make $251, and the estimate was $238. So they're basically pushing higher earnings per share. What is lower, though, is their net revenue, gross revenue, rather. Let's go take a look at see where we are. So we're up $10. Bring this back a bit. That's going to be at highs, probably. Well, the high at AFCO is 150.50. That's gonna run into the 142. So that's going to be a little action. Now, what is intriguing is that it's not hitting Apple. Apple's still at 116.40, and it closed at 116.28. I believe AFCO is one of the larger AVGO suppliers of Apple. So they manufacture semiconductor products. It's more than Apple too. That's the bottom line. You get military, aerospace systems, all of the above. Thanks, Terry. But it is a large supplier of Apple. You know, and Apple, folks, has not been able to get out of its way. And being the holiday season, that's pretty intense. You know, Apple is down $1 today. Not that that's a lot. But what you do have is that we're at 116. Apple wants to get down into that 111 area. If we go overseas, we take a look at overseas here. Last night, Hang Seng was up 98. Bottom line, what you can expect out here tonight, we had come down on Monday with 2.9 billion shares. You went up last night with 1.7. So Hang Seng, I suspect, is going to be right back downtown, just like we were. Nikkei, same setup in the Nikkei. The Nikkei actually rejected a higher price last night. And volume, same setup too, man. Monday, the Nikkei had 1.6 billion at 19,707. Last night, you did 1.1. Yeah, and you're higher. This is going to be really cool watching this thing shake out tonight. Because what you have with the Hang Seng, with the Nikkei, is that they haven't even made it, the counter-trend bounce as high as our S&Ps have. The Nikkei, the high in August, before the downdraft, was 20,521. The Nikkei had made it to 20,012. You know, so we'll go right over to where John is right now. We'll go to the FTSE. FTSE up here today was up $25. Also on light volume. So the FTSE saying wants to go right back. So check this out. FTSE did 548 million today. That's after coming down with 865 million. DAX in Germany, I don't believe the DAX held price out here today. It didn't. So the DAX is really a trip watching how this DAX shakes out. DAX did come down $71 out here today, even as the UK went higher. You know, so the DAX already is saying that it wants lower price. What you can expect out here in the morning, and this is where the real action is going to be, and this is where, you know, John is over in London. He's going to be talking about currencies. It's going to be the currency moves, folks. Okay, Draghi is out there in the morning. They are talking or not talking. Well, they're going to be talking about is there going to be more monetary easing in Europe, and if in fact that he has action behind the words, well, that would be saying that the euro will go down, dollar will go up, commodities will go down. Big number. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and fly with it. Thanks for being here, folks. Have a great night, safe night. Looking forward to speaking out right back here tomorrow. Oh, go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.